Here you are, your peace of mind, torn to shreds because you got a letter from the CRA saying you contributed too much and that you've incurred the wrath of the taxman. Why? You contributed the exact amount you were told you had available. Or did you? Here are 7 ways to navigate this minefield that the tax-free savings account can sometimes become. Know how much you can contribute. It's the start of the year, and you just heard that the government has given everyone an amount to contribute to their TFSAs. So you log into your CRA account or call the CRA, whichever rocks your boat, to check your contribution room, just to be sure.
We're sorry. All of our representatives are still assisting other customers.
You're doing what's right. You're looking for no trouble with the CRA. You see, the numbers, or the CRA agent, tells you the amount, and you're set to make a money transfer to your TFSA. This is the part where I tell you to wait. Just wait.
Wait, just wait.
The numbers from your CRA account, or the numbers the CRA agent just told you, may not be up to date if you made any withdrawals or contributions in the previous year. You see, between the 1st of January and the end of March, the numbers available to you and the CRA agent are most likely incorrect because the CRA doesn't have updated information yet. So, how do you know how much to contribute? This brings us to our second point. Know the role your financial institutions play. You probably have TFSA accounts with one or more financial institutions. You know, the usual. Banks, credit unions, insurance companies. Well, these guys send a log of your transactions from the previous year to the CRA from the middle of March until the first week of April. Around this period would be the best time to check your CRA online account or call the CRA to know your real TFSA contribution room. If your financial advisor tells you to call the CRA before this time, they probably don't know this part of the process. Until then, it's best to hold off contributing to your TFSA. But if you're good at keeping track of your transactions, then add or subtract the contributions you made in the previous year from what the CRA gives you at the start of the year. It should give you an idea of what you can contribute. For example, if you're told that your contribution room is $12,500 and you only contributed $3,000 in the previous year, subtract the $3,000 from $12,500. However, if you only withdrew and took out $3,000, add that to the $12,500. If you like this content, please don't forget to like and subscribe. This brings us to the third point. Tracking. You need to track your contributions. Sadly, your financial institution will not do this for you. Seriously, track what you put in or take out of your TFSA.
Seriously?
The CRA doesn't care what your financial advisor tells you. They only care about the transaction data your financial institution gives them. And if you're
I don't care. I don't care.
If you're not sure what is, wait until the end of March or the first week of April to find out what the real numbers are. This brings us to the fourth point. Withdrawing and contributing in the same year without knowing the room you have. Now, this blunder is one of the most unintentional mistakes people make, and I think it's best explained by telling you a story. Mary had a contribution room of, say, $10,000. She found out about this on April 7th. She then called her bank to transfer $10,000 from her checking current account to her TFSA savings account. Yes, I know. Mary called her bank instead of opening an online account and doing a transfer herself. She's old school like that. Besides, it's my story, and I'll do what I like. Now, where was I? So, on the 10th of July, Mary withdrew $4,000 from her TFSA savings account to pay for her holiday. She then put the money back on the 1st of August. Well, dear Mary has overcontributed by $4,000 because, though she was technically putting back the money she already contributed in the first place, the CRA says she can only put that money back next year. Yeah, I know. I wondered why too. Weird rule. But if Mary could contribute $15,000 but only put in $10,000, she'd have $5,000 left to contribute. Now, if she takes out $4,000, she can put it back in the same year without problems. Her initial $5,000 space is less $4,000 though, and the $4,000 space will only be available in the following year. 5. Buying unqualified investments in your TFSA. Though your TFSA profits are tax-free, there are certain restrictions on what you can do within your TFSA. For example, purchase art. You'll get taxed on that honey. Day trading. No, not a good idea. You can trade, but keep it low. Anything else?
No.
Anything else the CRA says you can't do, they come up with rules every 5 seconds, so if you're not sure, it's probably not allowed. 6. When you travel or emigrate, say you take a sabbatical to the Tonga Islands for 2 years, but forget to tell your bank to stop the automatic contributions to your TFSA. Wrong move. Also, not informing the CRA that you left the country and then putting in a date of entry immigration on your tax returns, it's going to look like you're coming to Canada for the very first time. And if you contributed before leaving, they're going to look at those contributions as invalid and send you a letter telling you that you've over-contributed. But there's a way to solve that. You either inform the CRA of your departure and your re-entry, or say nothing at all. Don't put an immigration date on your tax returns. And don't contribute to your TFSA while you're away. Not making it clear to your bank to execute a TFSA to TFSA transfer. This usually happens when you move accounts or when a spouse passes away. Let your bank know you want a direct transfer from one TFSA to another if you're moving accounts from a broker or another bank. Where a spouse passes away, let the bank know you want the transfer to be direct as well as the required documents or letters showing that this sort of transfer took place given to you. Because tax may be coming asking you why you moved a huge sum when you didn't have the room. Be ready to provide documents from your bank and such. Now, some of you might already have a mess on your hands, so let's talk about managing the mess and the route to taking on the least damage possible. Crisis control. How to take the least damage possible. So, you got the letter BREATHE. The tax on TFSAs is 1% for every month the account was in excess. This means that if you were allowed to contribute $5,000 but contributed $8,000, they will charge you 1% per month on the difference. First things first. Withdraw the excess immediately. We don't need you paying more taxes than you should. Secondly, you'll need to write a letter to the TFSA department of the CRA and let them know and then have the following things. The letter should let them know that this overpayment wasn't intentional. The letter should say when you noticed this mistake and what you did to resolve it. Attach a statement showing the contribution and withdrawal of the excess contribution. Ask if they can help you file a TFSA tax return. Pay the tax on the excess, just so that if they throw your request out, you don't have to pay extra money in interest. If you're making the payment with online banking, pay it into your normal tax account with the CRA using your SIN. Otherwise, send it by check along with your letter. Ask for forgiveness, and hopefully, the answer could be a yes. You've done your best. It's left to Jesus to take the wheels. If you like this content,
Jesus, take the wheel, take it from my hands.
Please don't forget to like and subscribe. And don't forget, Jesus loves you. He will keep you. Don't be afraid.